I'm Chetan Ambekar. Using the whole lens, I'll describe why one should go for H&M. Both H&M and INDITEX are manufacturing companies with sustainable business growth patterns, and business expansions. From the peer analysis, it is clear that the ROI median is higher for H&M, market capitalization is higher for H&M, variation in the warranted price, and the price is less for H&M. They have almost the same market share, which makes the INDITEX a bearish downside market and H&M a bullish upside market. Both the companies have the same CFROI level, and they are more than the cost of capital, indicates a more value addition for the company. INDITEX has been projected to go below the market CFRI for the next 8 years. Asset growth is highly variable and declining after 2016. It indicates that the company disregard for the reinvestment. Economic return for the shareholder is higher for H&M, with the dividend yield of 2.1% greater than the market average of 2%. Has been increasing since 2013 and will be increasing as per projections. Margins have been declining for H&M, but overall margins are higher than the INDITEX. This reflects a better operational efficiency. Assets are constantly managed in H&M with a constant return. INDITEX assets are declining, as providing an overlook about the operating quality. Charge ratio is lower in H&M. Variability in price changes for 5 weeks is higher in ITX with respect to H&M. Therefore, the risk is higher. Risk of defaults are also less. Overall score, value, and expense recognitions are good in the case of valuation analysis. It's clearly seen that the valuation factors for H&M are lower as compared to INDITEX, which shows that H&M is undervalued. At the same point of time, the EBITDA for the H&M is low, the sales are quite high, and the dividend yield is higher in the case of H&M. Credit rating for both the companies are A+, which provide a good capacity to fulfill the financial plans. Leverage is high for H&M, which provides a high operational cap quality. Valuation rate is also high for H&M. INDITEX, though having a higher momentum, can provide a higher asset price in future. The price range for H&M is quite high, but the stock price is higher in the case of INDITEX. Average deviation of the market price and the warranted price is 6% in H&M with respect to 8% in INDITEX. Bias is 16% in INDITEX with respect to 10% in H&M. State CFROI for the next 5 years in the case of H&M is quite higher, while the comparisons of INDITEX. The average hold price to book ratio, which is called the value cost ratio, is quite higher in the case of INDITEX with respect to H&M. Also, the economic PE in the ITX is quite high with respect to HMB. The forecasted CFROI for the H&M is quite higher for the 2017 with respect to INDITEX. INDITEX providing us average CFROI of 14% with respect to H&M of more than 16%. As the momentum in the case of INDITEX is quite higher with respect to H&M, the asset price can increase in the future. It has been continuously described that the asset price are variable in the case of INDITEX with respect to H&M. Considering the valuation model, we have holds price to book versus the valuation chart. INDITEX is well above the trend line. This indicates a higher chances of INDITEX being overvalued. H&M is below trend line, which means it is undervalued and it should be bought. Also, H&M is bullish, which is upside warranted price, while INDITEX is bearish, which is downward warranted price. So according to my recommendation, H&M should be bought. Thank you.